It is official, guys. I have been investing in the stock market for 1 full year. I want to share with you guys my journey from the beginning all the way up until where I am today. And I just want to let you guys know that in the beginning, I really didn't know what I was doing. I had no clue where to start, what companies to invest in, or not even what type of investor I was. But if I can do it, anyone can do it. And I mean that because really all it takes is the desire to learn, um, having a goal for yourself, knowing exactly why you want to invest, and just staying the course, being consistent, and learning the things that you need to learn and the things that you need to understand in order to become a self directed investor. I want to start off by talking about why exactly I got into the stock market. I started investing for the first time at the age of 36, and I started with the brokerage Robinhood. The reason that I decided that I wanted to get in the stock market is because, one, at my job, we didn't have any type of retirement plan. And then, two, in 2018, I had set a goal for myself that I wanted to become a millionaire. And when I say a millionaire, I don't mean in assets, I mean in paper. I wanted to see a $1 million bank account or some type of account with $1 million with my name on it. So in the beginning, I had no clue how I was going to reach that goal of becoming a millionaire, but I knew I wasn't going to accomplish that just by working my regular 9 to 5. So as I read books such as Think and Grow Rich, The Richest Man in Babylon, and so on and so on, I started hearing about passive income, and also I had a friend who would constantly talk about residual income, and I learned about the only way to become wealthy is to make money while you're asleep, and we have to put our money to work so that we don't have to work for our money. As well as I would always hear the phrase of wealthy people having at least 7 streams of income. And with all these different ideas flying in my head and the various self help books that I was reading about how to become a millionaire and just how to become the best version of yourself, I decided that I was going to go ahead and start investing in the stock market. And I got started on February the 1st, 2019. I opened my Robinhood account with just $50. And guys, I played around with that $50 till at least around May or so before I actually put any more money into that account. Because again, like I said, I really didn't know what I was doing or what I should be investing in. But what I did do is I used to watch Jim Cramer, and I know a lot of people talk a lot of flap about Jim Cramer, but what he does is he does show new investors a starting point, and he does encourage new investors to start out by putting at least $10,000 into a index fund or ETF before you actually start investing in individual stocks. And I would say the same thing for any new investors out there. If you're considering getting into the stock market and investing in stocks, start out with some ETFs or index funds. And then I was watching an Andre Jack video, and I found out about the app Weeble. And then in July, I began investing full time consistently in the Weeble app. And I was still putting money in Robinhood here and there, but my main focus was on the Weeble app because I just liked the platform. I liked what it had to offer as a brokerage, and I had decided that I was going to be a dividend investor at that time, and it gave me a lot of information on dividend type stocks. And I decided that I was going to go with investing in dividend aristocrats as well as dividend kings, companies that had a track record of consistently paying and increasing their dividends. Because being a new investor, I wanted to stick to something that was reliable and something that I could easily understand. And that would be the tip that I give you, is to stick to something that is simple and be consistent, and stick to something that you understand and know. Being in the stock market for 1 year and my first year of investing is, one, we have to be a lifelong student. I mean, and I'm just being honest with you guys, unless you're going to be a passive investor where you're just going to invest in a few ETFs and you're going to just buy them and hold them for the long run. If you plan on investing in the stock market, you have to be willing to put in the time to understand these companies, to listen to earning calls, to read financial statements, and just, understand what it is that these companies are doing and why you're choosing to invest in these companies is very important. And also, you want to have financial literacy. You want to read the books, read the articles. As I said, I watch a lot of content. I consume tons of content here on YouTube to help me become a better investor and to understand the companies that I'm investing in. So tip number one would be a lifelong student. That's one of the main things that I learned about being a active investor and investing in stocks. The second thing that I would say is just be consistent. The market is going to go up and down, and that's something that we have to understand. We are coming off of a long bull market, meaning the market has just been trending up for a very long time. And I would say that the little dip that we're going through right now due to the coronavirus is probably one of the longest downtrends that I've experienced since starting to invest a year ago. However, I will say that I am able to withstand this because I am knowledgeable about what the stock market does and the events of the stock market and how the stock market reacts to certain things that go on in the world and in the economy, as well as when it comes to the government. So you have to just know, be consistent, stay the course, don't listen to the noise, and keep doing what you're doing. Keep your head down and keep investing. Tip number three is understanding that the stock market is not a get rich quick avenue. It's not a get rich quick vehicle. You have to be willing to invest for the long run if you're going to be a real investor. There's a difference between trading and investing. If you want to trade penny stocks or things like that, that's a totally different ball game. But if you're going to be a real investor, you're going to buy good companies, you're going to hold good companies, you're going to either buy good growth companies or good dividend companies, or maybe even be a speculative stock investor. But just understand, it's not about getting rich quick. It's about investing your money, putting your money to work, making your money earn you money, compound interest, and allowing your money to grow for you in the long run. And then last but not least, I think one of the most important things that we have to understand about investing in the stock market, the number one rule is buy low and sell high. It goes right back to, don't get caught up in all the noise. Don't get caught up in the short term events of the stock market. As I said in the video that I made earlier this week, you have to understand that some things are going to happen in the stock market and none of us can prevent them. There are going to be crashes. There are going to be recessions. Every time the stock market goes down, just know that the stock market is going to go back up again. And just know that investing in the stock market is one of the most consistent ways that people have become wealthy or become a millionaire. So just remember, stay the course. Don't give up. Don't give in. Don't allow the noise and the emotion of investing to cause you to quit. And keep your goal in mind. Know what it is that you want to accomplish. And I think just as I have been, you can be successful in the stock market as well. Thank you guys so much for tuning in. I am Marie Brown. This is my channel, Minds in Motion, where we talk about personal finances, investing, and how to become the best version of yourself.